Hello traders, welcome back. So in this video, we will analyze the Nifty 50 using only price action, candlestick psychology and volume. We won't use any indicators because the price itself tells the real story of what buyers and sellers are doing. Let's start with let's start with 4-hour time frame. If we observe the 4-hour chart, the market has been making lower highs after rejecting from this supply zone 24500 supply zone. So selling pressure increased significantly, and we can clearly see a series of strong bearish candles pushing the market lower, pushing the market lower. So in our previous video, the market reached this demand zone 23800 and 23900 in between this demand zone and got a rejection. Means buyers observed with significant selling pressure and started moving upward, moving upward. So this is actually a retracement. This is actually a retracement, not a strong bullish momentum. Not a strong bullish momentum. Now, if you observe Friday session, last two green candles carefully, the market opened with the gap down. See, previously the market closed here. The market closed here and opened from this level. It's a gap down opening. Gap down opening. Generally, which tells us sellers were aggressive before the market even opened. However, instead of continuing strong fall, buyers stepped in near this zone and, and formed a big bullish candle. This created a green recovery candle. This created a green recovery candle with relatively good buying activity. If you observe the volume also really good. So the next candle is a dozy kind of candle. Even though it is a green candle, we can call it as spinning top or indecision candle, which tells us one thing. The strong selling momentum is slowing down. At this point, buyers and sellers are temporarily balanced. So this is why we should avoid jumping to conclusions after just one green candle. After one green candle. Now, if you look at this candle here, sorry, here, it's an indecision candle or small spinning top candle. If you observe the volume, volume is low. Volume is low. Suppose, suppose if this candle is having a volume like this, the next candle is going to be a red candle. Next candle is going to be a red candle for sure, based on CWRV, based on CWRV concepts. But the volume is low here. Now let's combine this with the volume. The previous bearish move happened with increased participation, showing genuine selling pressure. If you take this here, a genuine selling pressure. Also, here also genuine selling pressure. The last candles are showing reduced momentum compared to the earlier bearish impulse. Compared to earlier bearish impulse. This suggests sellers are no longer as aggressive as they were in a few sessions ago. That does not automatically mean the trend has turned bullish, but it tells us the market may be preparing for the next move. May be preparing for the next move. Now, I want to say one simple thing. So, while you're observing the chart, you will be seeing so many gap ups, gap downs. See here, here it is a gap up, a gap down opening, a gap down opening, gap down opening. Why these gap ups, gap downs occurs? So many beginners ask why these markets suddenly opens with gap up. The answer is so simple. The market closes in the evening around 3:30 p.m. but global events continue overnight. For example, global market movements, important economic data, corporate earnings, geopolitics news, institutional buying or selling. When these events happen after market hours, traders adjust their orders before the next opening. That's why the market sometimes opens much higher or much lower than the previous closing price. That's why gap ups or gap downs occur. Now, now for the next week, what levels we should focus on? What levels we should focus on? If buyers continue defend this demand zone 23800 and 23900, we could see another bounce. We could see another bounce up to 24350 or 24,000 up to this. If buyers manage to close above 24230, if buyers manage to close above this level, sorry, if buyers manage to close above this level with a strong volume, the probability of moving towards 24350 would increases. So above to this level, major supply area remains around 24450 and 24500, where selling previously become very active. On the downside, on the downside, if market falls down 23800, breaks with a strong bearish candle and volume, increase in volume, sellers could gain control again. So we should also remember that technical analysis is only part of the market. Global developments can influence price action. If positive geopolitical news comes out, such as easing international tensions or strong global markets, reduced crude oil prices, it can support buying. If negative news appears like rising geopolitical tensions and unexpected global uncertainty, selling pressure can increase quickly. So always combine your technical analysis with important market news. I hope this analysis helped you understand how to read market psychology using only price action, candlesticks, and volume without depending on indicators. The same concepts can be applied to Nifty, Bank Nifty, stocks, forex, commodities, and even cryptocurrencies. Even cryptocurrencies. Now, I just want to say something. Generally, I've been analyzing with using 4-hour time frame to help to understand overall market direction. However, I never take trades based on higher time frame alone. Before entering any trade, I always wait for confirmation on 15 minutes time frame. That confirmation can come from price action candlestick patterns such as engulfing candles, volumes, part money concepts like break of structure, change of character, or liquidity sweeps. So in today's video, my focus was only explaining the higher time frame market psychology. In my upcoming videos, I will show you how I use the 15-minute chart to confirm entries, manage risk, and identify high probability trading opportunities. Remember, don't trade based on predictions alone. Always wait for confirmation. Confirmation helps improve the quality of your trading sessions. Happy trading. Thank you.